This we are welcome to the module 3 of this course. Welcome to the module 3 of this course. So we'll go straight to the point. We'll be able to cover the let me see what I okay. Sorry. So we'll be able to cover the module 1 and 2. So we are now going to we'll be able to we've dealt with the checklist. What are the things to look out for? The miss, the touch, and the liquidity sweep. How does this validate the SNR level? So now we go to engulfing pattern. Engulfing pattern is a very, very simple. It's common. It's regular. It's most regular in the charts. It's regular. You can go to Google if you want to look more on that. How to identify engulfing. You can study it on your extra time. But I just go to Google image, or click on engulfing pattern. You have a lot of this thing, but most of them could be junks. Or just attach yourself to just see only the engulfing pattern, and most of them could be subjective or may not meet the objective of what you are looking for. But the basic knowledge is like this one. This is the basic thing. That's the basic one. But we have different patterns. We have different variations to engulfing. If you want to study more, you can go to the Google website and search for meaning of engulfing. All right. So I'll be going through the manual. Use the manual as a guide. Here. Yeah. To explain engulfing for you. We'll be able to cover this area. Touch, miss, the rest of them. Confirmation use, confirmation. And the engulfing patterns. Is it the PDF? Shouldn't be the PDF. Shouldn't scatter like this. Yeah. So, and what is the meaning of an engulfing is just simply a covering up of a particular object, a complete cover up or price rejection. That's what engulfing represents. It's simply a cover up. So the bullish guy tried to come up, pushing the price higher, while the recent candle covers it up, closes it up. Then for bearish engulfing pattern, the previous candle was a bearish candle selling from the open to the close, right? Then the next candle opens here and closes higher. That is engulfing. That is engulfing for you. So the basic thing is engulfing market is entirely one market eating up another one. It's all about price. Still price. It's all about still price and rejection of price manipulation. Yeah, the same thing. The same concept. Engulfing represents in the market. The same concept of manipulation or rejection that engulfing represents. While one guy is going up higher, another one comes in to cover it up completely, driving it out of the market completely. That is engulfing. So one guy or one market eating up another market. That is engulfing. That's engulfing. This is the perfect, this is the most regular or the basic this thing of engulfing. That means what we are looking at is the body of the previous candle. The body of previous candle that must be engulfed, must be completely engulfed by the present one. Yeah. Like I told you, you can go to internet and you get a lot of people get wrong this thing about conception, about absorption, or conception about engulfing candlestick. You know, but for me, by experience, by experience, engulfing should be the cover up of the entire body. Yeah, by as long as this week here, the week here, as long as this week covers up the entirety of this range to the top, as long as the body has been enclosed by the high and the low of this candle, that is engulfing for you. As long as the body has been totally covered up by this body, so that's engulfing for you. That's engulfing for you. That's engulfing. So it could be that the price, the wick may go up or contain within the entire range of this. As long as the body does not go outside the full range of this guy, it's a cover-up. It's a cover-up. So we'll show you, we'll go straight to the pattern, different patterns of engulfing, so that you don't miss out on opportunities of displayed by engulfing. So that when you see some pattern, you think it's not engulfing. Some people take engulfing as just a single candlestick. No, it varies. It could be it could be a single candlestick covering up just one this. It could be in another form. It could be 3 or 4 candlesticks combining together to cover up a big guy like this. You can have you may have this as you may have this there, and this may be shorter. It could be shorter like this. It could be shorter like this. This could be shorter like this. And prevention, if this also does not come longer like this. So if you have this, here, then another one opens below and close below it. We have another one that opens there. Then the third one may also opens and close lower like this. So you still have this as what? As engulfing. You still have this as engulfing, because the entirety body of this bullish candle was totally engulfed by this theory. As long as we don't have a white that intercepts this bearish runs, as long as we don't have an interception, we will have a consecutive three bearish candlestick covering up this guy. It's an engulfing. So if you put all this into, if you put these three thick candles together, it simply become a one. It's the same thing with this candle. It's the same thing with this. No difference. There's no difference. So because we are concerned about the body, not the wick, there's no difference. So as long as we have this covering of this, it's an engulfing. So the other side of it is you can have this like this. For bearish engulfing, you may have that as a shorter body with a long wick. Then you may have this you may have this like this. You may have this like this. It could be in this form. It could be in this form. Then you have another one opening higher. Then another one opening higher. As long as you have this set of candlesticks, it's still engulfing. It's still engulfing. It's still engulfing. Because if you put them together, you have a single full body engulfing like this. So covering up the entirety of this bearish candle. So that is what you need to understand about engulfing. So we go straight to the different variations so that you let me open up the manual to see different to see the different stuff of the variation of engulfing. Yeah. So engulfing, I told you, engulfing is valid as long as the entire body of the first candle is entirely engulfed by second candle. So don't be carried away by those nuances or wrong perception that we only have a single candlestick that represents engulfing. No, if you have them in 3 or 4, more than 4, it's still engulfing. Yeah, still engulfing. So these are the patterns. When you see these varieties of engulfings, you take note. It's still the same thing with engulfing. It's still the same thing. You see the same thing. Your focus is on the body of the previous candle that needed to be engulfed. Then by the wick, that is the high and the low of the present candle. That's your focus. That's your focus. You can see now we have this like this. Then we have this, what I just described in the past. What I just finished telling you. We can have a engulfing like this. You see the same thing. As long as we don't have an interruption from the first to the third candle. As long as we don't have interruption, rather that we have a consecutive bearish candle that engulfs the low of this bullish candle. That is engulfing. The same in the other way around, this is bullish engulfing. As long as we have 1, 2, 3 that engulf the high, both the high and the low of this candle, we have engulfing, or the body, we have engulfing. So this is engulfing. We call this a gap engulfing. This is a gap engulfing. Here price opens lower than the close, but as long as the wick covers up the body, it's engulfing. It's engulfing because this is total range of a candle. The wick high and the wick low is total range. As long as the body is curtailed within the range, within the total range of that candle, it's still an engulfing. So you can have the engulfed candle as a pin bar or a doji, it's still engulfing. It's still an engulfing. So that you don't miss out, what I'm telling you this, so that you don't miss out on many opportunities that is available, in the. So if you can have it as this, as a very small body, and you think this is not an engulfing. It's an engulfing. It's an engulfing. Yeah, you can have it like this. You can have it like this. It's an engulfing. So You may have another one below, which is bullish engulfing. It could be just a pin bar. It could be just a pin bar like this. It could be just a pin bar like this. And you have this as a white, as a higher closing candle. So this is a bullish engulfing, that this is a bearish engulfing. So that is the different variation of engulfing pattern. I told you that as long as this is discovered, we have engulfing as valid. As long as we have this the engulfed candle body entire by the enclosed by the recent candle. So then the uses of engulfing, there are two uses we are going to make use of. There are two uses we are going to pinpoint here about on engulfing. The uses of engulfing, we use engulfing pattern one to mark a zone. We use engulfing pattern to mark a zone. What do we mean by a zone? We'll talk about that. Then the second one, it can also be used as a confirmation entry on price retest of zone. We can use engulfing also to confirm a particular trade setup within a zone. We can use it to confirm an entry point, because we believe that if engulfing is established, price will usually come back to retest it. That is the basic truth. Price will come back to retest it. If this is engulfing, if this is a bearish engulfing, right? We have this formation like this. So this make up what we call a zone. This is a zone level. This is a zone level. So what do you mean by zone? Zone is where we have a bulk orders of selling and buying. Yeah, this is where the market maker usually use as their buying and selling a pool. So we mark it out as a zone. We can use it to mark a zone. So if you want to mark this as a zone now, what do? You take the high, how to mark your engulfing. Yeah, so we need to change this. So this becomes a zone. This could become an engulfing zone. This is an engulfing zone. We call this, and we name this as an engulfing zone. Engulfing zone, right? So that when price, we are looking for price, because this is a displacement from this zone downward, right? Then we are looking for price to go up and take order from the zone and then move down. If you want to sell, you must sell from the zone, not here. You don't sell outside the zone. You must sell within the zone. You sell within the zone. So we use the zone as a selling point for sell. For buy, we use the zone to buy. If you have a engulfing like this, as this, you have a engulfing like this. If you have a engulfing like this, or let me put as down, you have this as what? As our bearish candle, right? This is the wick. I don't know why it's trying to form this. So if this is this is engulfing, right? So this is the bullish. This is one that engulfs, right? So how do you mark out the zone? How do you mark out the zone? You use it as a zone. How do you use it as a zone? You mark it out from this body to the low of it. depending on the size, the range of the engulfed candlestick. It depends on the range, please. We'll still talk about that, how to mark your range, how to mark your zone. So this become an engulfing zone. So you can see that we have used this engulfing now to mark out a zone, to know the particular area we are going to buy, so that you use this to fix your order. Your stop loss will be here. Your stop loss will be here, while the take profits could be the high of the move created by engulfing. So stop loss will be there. So what you are looking at is to allow price to come inside and take your order and execute your order. So we'll be waiting for price to come in, enter the zone, then you buy. You buy. So you don't buy anything outside the zone. If price does not enter the zone, there's no buy. So that's why we said engulfing helps to validate a setup and at the same time entry point. So this is a setup now, right? This is a setup. Then the entry point will be the zone. So yeah, it performs both the two together at the same time. So that is the use of engulfing. Then how do you mark your zone, different level of engulfing, so that you don't miss the entry points? If you have this as a bullish candlestick, for example, if you have this as a bullish candlestick, if you have this as a bullish candlestick and you have the wick so long like that, probably you have another wick like this, the lower wick like this. I'm teaching you now how to mark an engulfing zone, how to mark your engulfing zone, how to mark an engulfing zone. So you have the bearish candlestick that comes down with it. So what do you do in this way? How do you mark up the zone? If you see a engulfing like this, maybe this, do you mark the entirety of this zone from the high to the DC? You can see very, very huge, very, 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 very big. Like this. Because this is where you're going to, that's where you're going to put your stop loss. How do you do that? How do you curtail the much exposure to risk there? How do you curtail it? So you must be very smart when marking the zone. You must be very smart. You don't want to miss out opportunity that exists there, but at the same time, you don't want to be caught unawares by the spark. So if this is for example, if this is your entry, this is your stop loss, you can imagine the range from the entry to the stop loss level. The range is huge, almost about 650 something. And you don't know if the price will go so much like that to almost about times 2 of your stop loss level. So what do you do in this case? What do you do? So what you do, one, you just have to do adjustment. The adjustment I mean is that you connect from the high to the body, the open. Connect from the high to the body. Then you can use the half of engulfing of that zone. The half of it. You can use the half of it as your entry point. That means you are going to bring this to this half, right? You can use the half of this as an engulfing. But what of some cases, price may not get to that place? What do? You either use the device, then you can also, if you don't want to use the DC, you can also refine the chart. It depends on the time frame you are using. If you are using a higher time frame, you can swell, you can refine the DC lower. If you are using if you got your this in the setup in 4 hours, you can refine to 30 minutes, 1 hour, or 15 minutes. Then refine low, low, lower, lower. The lower you get to, you know, the lesser this thing becomes. Your risk exposure becomes. But it has pros and cons. You know, the pros is that you may have a lesser. You will have a comfortable entry, but what the cons is that that's the benefit is you may have a less risk trade, right? You may have a less risk trade, but the disadvantage is that you may not have many trades as being expected, as many as it ought to be. You may not have many trades because sometimes the price will get to this level. You get to this place, and start going down. What if you have drafted this thing upward like this? So that is the pros and the cons. Yeah. So if you cannot curtail it, you leave it and look for the one that is more comfortable for you. It's not compulsory you take all the trade. Look out for those trades that will give you a relaxing mind, and you'll be able to get a very low risk and high probability trade. Yeah, I'm not saying, but if you can do that, maybe you want to fine. You can do that. You can put it here, because sometimes you may not get to this, or you can use the half of the range, so that if you get to that, maybe by a week of the candles, you get to that place, fine. That is that. Then, so you can do that if you have a long range body. But if you have a very good DC, like for example, you have this pin like this, you have the pin like this in a shorter form. The wicks come in this shorter form. That's good for you. So you just have to do this. You use the entirety of this. If it happens to be a pin bar, if it happens to be a pin bar like this, good for you. So what you don't need to do is you use either like this, or you use the entirety of it. So when you get a low range engulfed candle, it is better for you to use the entirety of that's the high and the low. You mark from the high to the low. But when you have a kind of this thing you cannot contain, you can use the body from the high to the body, the open, from the high to the open. Not this candle. You are focusing on this. But if this extend longer like this, what do? You extend the DC to this, to capture the high, because price could still go up here to tap into this place, so that you don't put your stop loss here and you get hit out. If you put your DC here, what about if price still go higher to tap into this high of this place? So it is better you capture it with the recent high to the body of the engulfed candle, to the opening of the engulfed candle. If you want to do for the bullish engulfing, if this is you just have to reverse what I've discussed so far. If that is your DC, then we have another candle like this. If you have this as yours, then your engulfing will be what? Your zone will be what? You mark from that opening. Oh, let me further forward drag this so that you differentiate it from. Yeah. So you start marking from the top of that body to the low of this guy, the engulfed candle. You mark from there to the low of the engulfed candle. That means if you get this range, right? If you get this range, but if you get a longer wick above that place, if you have this longer wick like this, like this. You may still leave it like that, because you may not be able to be comfortable with the entirety of this. It's too long. It's not, it's too, that's a risk this thing. So you just have to be very smart. So you can also use the half of it. You can also use the half of it as what, as entry point. That means the half of this zone here, you can mark it out, then draw the DC to it. Like I told you, it has advantages and disadvantages. Right? It had that. So you are in a situation where you have a very low body, a very small body of engulfing. That's good for you. That's good for you. So you just have to do this thing, and that's good for you. So, and then you're waiting for price to do what? You're waiting for price to come in. So you set your stop loss below this zone. Your stop loss is set below this zone. Then you target the high, the next high. So your stop loss, your entry will be, put up your buy limit here. So your stop loss is set here. So that when price come in, you tap into that zone, your order is executed and moving higher to complete, to fulfill your order. To fulfill your order. So that is how to mark a zone. That's how to mark a zone. Cool. To use engulfing to mark a zone. Then we told you that we use engulfing to confirm a setup, so that anything that falls into this zone will be considered as a good entry point, as a valid entry point. If nothing comes to the zone, you don't trade. You don't trade. Take note of that. You don't trade. So because no validation, no entry, no trade. No validation, no trade. You are trading based on rules. If nothing falls into this zone, you don't take a trade. That is that for you. We'll be able to show you different pattern of engulfing. Let's go to the. So what's the next topic? The next topic is hidden. We'll come in back and we'll come back in the part 2 to talk about the hidden engulfing and the trade plan. So we can round up on that modules. So that is engulfing for you. That's engulfing for you. How to identify the zone. Then what else? So I've showed you different type of engulfing. Then we have this as what? As our gap engulfing. Then we have a special one, a specific one. I will go to focus attention upon again. Is exclusive type. Yeah, you have to focus attention on. Yeah, we call it a hidden engulfing. A hidden engulfing. A hidden engulfing. What is a hidden engulfing? A hidden engulfing is when you have a 2 consecutive candle with moving in the same direction, right? Then we have the wick here. Then the second candle carries a lower wick here, like this. So whenever you see this, it indicates what this is what it indicates in a lower time frame, but it is hidden in a higher time frame. That's what we call it, a hidden. You can call it as a gap. We talk about gap when we were talking about when we were talking in the episode 2 or thereabouts, type of S&R. No, we talk about a hidden S&R. Yeah, hidden. We talk about the hidden S&R. So the same thing applicable to engulfing here. So when you refine a hidden S&R or this pattern into a lower time frame, this is what you get. That means a buyer's move higher, right? First of all, initially move higher, then it close lower. When it closes lower, and when the next candle opens, it comes lower, right? The sellers put the price lower to this level. If you draw it forward, this is the low of it. If you draw this before, this is the high of this place, and this is where the distance starts from. This is where the impulse starts from, right? So you can see that it has made what we type as a DC or inverted V or thereabouts. So can you see that? Can you see that? So this place push down, then it starts moving higher. That's exactly what happened. So this place now has now constituted what we call a zone. It's a hidden zone, but you cannot see it obviously in a higher time frame. But when you it's a big secret. It's a big secret. Yeah, a lot of people don't. When you are trading and you see this along the path of your trade, take note. Take note. Price must react to it. So you quickly adjust your what. If you want to be in trade, you quickly adjust your trade to the bottom of this place. You know, your stop loss on the table, and then maybe use it as a new entry point. So because price, the possibility that price will come back and hit it out and take out order here, then start moving. You can use it as a continuation pattern. You can use it as a reversal pattern. Wherever you see it, yeah, you can use that. When we come to what to look out for in this, when we are doing our multi-time frame analysis of the storyline, we'll talk about that. We'll talk about that. When you see a gap, like this, approaching your this, what to do. So the opposite is this. Sell when you see two candlesticks coming down with this week, this one carries lower week, this one carry a higher week. Take note, this is the formation in a lower time frame, but which is hidden in a higher time frame. Which is hidden in a higher time frame. So when you refine it, you must refine it into a lower time frame. When we come back in the next part 2 of this course, we will lay emphasis much on this